So this week, as you can see, we have quite a stacked economic calendar. Lots of red folder news on both Euro and USD. So if we take a look, on Monday we got the French and German PMI, as well as the US PMI in New York session. Then on Tuesday we got, at the end of the New York session, we got again a red folder on USD, and then on Wednesday we have FOMC. So on Wednesday we won't trade, or we will only trade London session, but we won't trade the New York session. For Monday again we skip Monday, and then on Thursday we have, as you can see, we have 3 high impact news during the New York session, so we will therefore trade only London session, and if you want to trade New York, we want to wait until the last high impact news event of this session has been released. And then on Friday we also have again news in the middle of New York session at 8:30 a.m. and then we also have news at 10 a.m. as well. So we also put our focus on Friday on the New York session if we plan on trading that day. Again, remember, this is only the time aspect of determining high probability or low probability trading conditions. We always have to combine that with the price action once we are trading into that day. So last week, again, we've talked about how we want to use this daily inversion level or daily balanced price range here, right? To look for shorts aiming for the discount of this daily dealing range here, which is right here. So if we mark that out, this is our level we want to aim for at least. And then we also have a swing low right here, so this could also be a potential target here. So this is the first swing low inside of the daily dealing range, right? So this could be a potential target to take out stops resting below this low here. So we have Friday highs here, and now I want to see what Monday is doing. And as you can see, we have traded right above this high here of Friday London session into the daily BPR I've talked about, and you can see how then we had news right after at 9 a.m. and then we got the sell-off right into the EQ of this lower daily fair value gap here, right? So yeah, we again we had a bias. We were right for bias again, but again there was no setup again because we don't trade the Mondays. So, but at least we can see now that we are having a bearish order flow, as we are clearly respecting the daily bearish PD arrays and disrespecting the bullish ones, right? So order flow is now on the H1 and H4 clearly bearish. So then going into New York session, we probably will see consolidation or retracement again. Why? Because we had an over 80 pip London session, so therefore we probably will see consolidation or a retracement back into this inefficiency here during the New York session. And that's what we got. Pretty much retraced all the way back and then just kept consolidating in the lower half of the London range. Then again we wait for the daily close, and then on Tuesday we want to take shorts aiming into the discount of this range and eventually this low here, right? So we have a swing high right here, and we also have the Asian highs right here. So this could be potential turtle soup highs where we trade above and then we see a sell-off during London session. So again, we play the London manipulation, and then we want to see a lower time frame change in order flow. We also have all of those up close candles here, and you can see so this is one bearish order block here on the H1, and we have the mean threshold aligning right with this swing high here. So we want to see now a run above the counterparty liquidity, right, which are those highs during London session. Again, time and price, and then we want to see maybe an M5 or M15 change in order flow to get into a short position, right? So we go to the M5 for a lower time frame perspective of what price is doing, and we are now trading above the Asian highs. I also have taken out this high here, and remember this high was also aligning with the H1 order block mean threshold. So we now see a retracement here, but again there's still no really significant change in order flow here, right? If we take the range low, range high, we are now trading right at the equilibrium. We still have this order block here, this fair value gap here, so I would not short here already, as order flow is still bullish on the M5. And now you can see how we got quite a sell-off here into this order block, but we are still respecting the OB right here. And if we get a close below, we can use that level to use it as an breaker to then look for shorts. But for now we are still trading inside of it. You can see we are trading the upper half, so we still don't want to short here now. And now pretty much what we have here now, we got a reaction here, we made a new high here, right? We have a high, higher high, short-term high, we rated that M5 here, and we then also got a market structure shift here on the M5, right? We have a high here and low, and we break the low. So this right here is our breaker zone, right? So in this case I also take the wicks here of this, because the bodies are relatively small, so that's why I take the entire candle with the wicks. And again we take a look at the DXY. So we add a DXY again. So as you can see here, we compare again the lows of DXY. Made a lower low here, but on Euro we failed to make a higher high here, right? So we have an S&T divergence here at our key level on the H1, after taking out the buy side and the EQ of the mean threshold of the H1 order block, right? And we also have an M5 change in order flow here. So we have a setup here, and we can now take a short trade here. So again we place a limit here at the fair value gap, which is right at the breaker as well, and then stops we put above the London high. Again you can use the SMT high as well, but I feel more comfortable using the SMT high, especially because we are trading quite in a tight range with only a 7.7 pip stop now here, so that's still quite a decent stop size. So I put my stop here, and then the first TP would be the lows here for 2.5 hour trade, and then I would leave some runners for lower prices here, right? The FVG low, for example, could be one target for then a 6.7 R in total. So I would take off like half of it here, or 40%, and then I would leave some runners for lower prices here, right? And we would have gotten a fill here, and you can see we are respecting the lower half of this breaker block here. And there you can see how we now hit the TP of the first partial. Now we pretty much can move our stops to break even, right? We have taken out the short-term sell side, so price should not retrace back to our entry. Stops to break even, and we now leave the runners for lower prices here, right? So New York session is about to start. Again, we could look for a New York continuation trade here, because we still have this low here, right, which is a potential target. So yeah, we will see if we can get a potential New York continuation here. If we check the H1, we also have created now an H1 fair value gap here, and we also have on the M15 a fair value gap here above as well. So this would be my preferred POI to look for continuation, because it's also aligning with this order block here, right? Those two up close candles. Again, in the order flow, in a bearish order flow, the up close candles should act as kind of like roadblocks for price. So we have PD array alignment here, so that's why I would pick this POI here. Also, if we take the swing high to the swing low, you can see that it's right in the premium of this lower time frame range here, right? And as you can see, we quite did not trade into that level here. We had a run up, and then we now have seen this placed into the downside, and we've also taken out the lows here. So for me, that's not really a high probability setup here. I would not take another short here, especially because we're already short from higher, right? So not really a fan of taking a trade here anymore, as we're already trading quite a bit below the New York Open, right? We have the New York Open right here, so we are pretty much trading already in quite a deep daily discount. So I'm not really chasing price here anymore. And now we also would have hit the full TP of the London shorts right here. And that would be me done for the day with trading. And yeah, again, waiting for daily close. And you can see now here we have a change in order flow here on the M5 and even on the M15, right? We trading at the range lows of the daily fair value gap. Also in the discount, right? This line was the discount of the daily dealing range. And now we see a lower time frame change in order flow here. And we are also trading below Monday lows, right? So with our Monday range, Monday high, Monday low. And if we get back into the range for daily close, then we might see another run for the Monday highs here. So also, if we go back to the economic calendar, we have FOMC on Wednesday. So tomorrow is Wednesday, so we have FOMC here as well. So we might see a run up into that level heading into FOMC, right? But again, we are out of trading time zones, so there's no session here anymore. So we will skip, or we are done for the day and wait for the daily close, right? So we have the H1 swinger here. We closed above, also above those two up close candles. So we might have here a potential H1 change in order flow. And we can now, you can see here we have this breaker, and we might see some retracement taking out the buy side of all of those highs here, right? We have this high, and obviously the Monday highs. So we might see the Monday range here coming in again. So we trade back into the H1 breaker here, and now I want to see if we can hold that level here. And you can see we're trading a bit below, but we are getting above. So we have Asia making a low here, and then we see a rally into London Open. So there's nothing really interesting for us, because we have equal lows here now, and also the Asian lows. Also we have the daily open here, right, this price line here, and we only want to buy below the daily open in London session, or below the Asian lows, which in this case we don't have, so we don't really have a setup yet. And so we have equal highs here now as well, but we also don't want to trade the New York continuation. So why don't we trade the New York continuation? Because London did not make the low of the day. We have Asian lows here, London lows here, so longing here in a daily premium, right? We have the New York opening price here, is against the rules, but we also don't want to trade a reversal here, because our bias is bullish for now, right? Or at least short-term bullish until we take out some of those highs here, right? Why is our bias bullish? Again, because we are now trading in the discount of the daily dealing range, and we have seen an H1 change in order flow here. So we might be in a market maker buy model here, right? So we have the Monday highs. So we could have this our original consolidation here, right? Smart money reversal right here, and we have the sell side of the curve here, and now we could see the buy side of the curve here, right? And now let's see what New York session is doing today. We are just again observing price action, and you can see we are now trading again at the Monday range lows here. So if we are playing the Monday range, we should not close back below here again. We should now stay inside the range here to keep seeing higher prices on euro here. Also, obviously we have FOMC, so we don't trade the New York session anyway. So again, we have multiple reasons why we don't trade the New York session today. First of all, the time-based rules, and then again the price-based rules, which I already mentioned. The London and Asia session profiles do not fit our bias or our criteria for a New York session continuation. So now we have FOMC right here, and as you can see, we take out those equal lows here, which is aligning with this M15 Favaldi gap, and then we see price shooting higher here, right? And pretty much, if we are bullish now, we should hold that level here. We should not retrace all the way back into the range here, because then we probably would see an AMD, right? We have a range, we have a manipulation, and then distribution. So if we are not in an AMD here, we should then see now expansion here and not a retracement back here. Because if we retrace back here, then the chances for an AMD are most likely. Ideally, we now see price expanding from this level here and not retracing much lower, but again, we are out of trading time, so out of session, so there's not really anything I would trade here now. So we wait again for London session to then take a trade. So again, we want to see what the Asian session is doing here. And what we have here is we have Asia trading into an PD array, which is this H1 fair value gap here. So we have an rate on the stops here into this, which is also obviously creating the fair value gap, this low here. And then we see price displacing to the upside here. And for this scenario, we can use the London continuation. So we now don't expect anymore London to trade below the Asian lows again, because I told you if we trade back in here, we probably have an AMD to the downside, and if we are expanding to this high here, we don't want to see price now revisiting those lows here. So we wait for London open and see if we can find a lower time frame entry model to frame a trade on, right? So we have this small H1 fair value gap here and the bigger one right above. So we want to see if we can now see some sort of M5 change in order flow to then get into a trade here, right? So right here now we take out the short-term high ahead of the London session, and then we have all of those up close candles where we close above, and then we see finally some displacement, and we also close above this high here. So at this point I would just market long here, so put a market long here, and then stops below this low here, and then the TP would be the Asian highs where you could take something off or put your stops to break even, and then the Monday high would be the final TP in this case. So for this trade, the session narrative would be the London continuation, and the price-based narrative is the market maker buy model we're currently trading in, and this should be the last stage of the market maker buy model into the high here. So we longed here, right, and now we trading above the Asian highs, and at this point you can move your stops to break even, as price should not retrace back into the range here after taking out the Asian highs. You should just see a straight up continuation into the buy side here. And there we go. We now hit the TP of this trade during the London lunch hours. So now again, if you take a look, where are we trading now? We are trading right at the inverse fair value gap, the BPR, daily BPR, and we're just taking our stops, right? So if we are bearish now, we should see a rejection from this level here. So price should not trade back above, it should sell off now from this level here, right? And we also have all of those lows here. Also we completed the market maker buy model, right? We have the sell curve, the sell side of the curve here, and now we finished the buy side of the curve as well. So we might see now some reversal happening here. Also, if we take a look at the economic calendar, we have news coming up in the New York session, right? The 3 high impact news we have, so we can expect some volatility to happen in the New York session of today. And we also have London lows here and the Asian lows. So we will now watch and see what price is going to do. And you can see we pretty much see a sell-off here right at New York what news are coming out at New York Open. And yeah, you see how we have already a 150 pip expansion to the downside, and also taking out the swing low we've marked out earlier. So you see how price is trading from liquidity to liquidity while respecting the PD arrays on the daily chart. So this is showing us that we are clearly in a bearish market where order flow is bearish, price respects the bearish PD arrays and disrespects all the bullish ones on the higher time frames. So clearly price action is now in a sell program, or the order flow is in a sell program, and we can aim for further shorts into those lows here and eventually the swing lows here as well. So again, we wait for a daily close now. And you can already tell for the next day we won't trade because we had just seen a 150 pip expansion to the downside, so the next day is a low probability trading day. And we close here, so you can see if we go on the daily again, we pretty much, you see, taking out the short-term high daily into the balanced price range, and now we also closed below this daily fair value gap here, right? So we have now also a new inversion level created here, right? We closed below this fair value gap, so now we have a new inversion level, which is the lower half of this daily fair value gap, right? And not only do we have now a daily inversion fair value gap here, we also have an up close candle here, right? So this is a daily order block, and it's also a high probability order block because it has taken out liquidity from this high, and we've broken below the swing low here, right? You can see we broke below, so this is a high probability order block, and you can see it's also aligning with the EQ of this inversion daily fair value gap. So we have PD array alignment here again. We have, if we can say, okay, all of this is now one big market maker model, right? Market maker sell model. We have the original consolidation right here, this level right here, and then we have the smart money reversal with SMT here, right? We have the SMT here confirmed because we have seen a shift in order flow on the H4 and also on the daily, as we have disrespected all of those PD arrays here, and now we can aim for this fair value gap here as the next objective, and then also the swing low as a next draw on liquidity here, right? But for this week, our trading would be done. We had 2 trades, one short and then the long of the intra-week market maker buy model. And again, this is one trade example for a counter trend trade. We have the daily or the higher time frame bearish order flow, but we still have an H1 market maker buy model inside of that order flow to give a retracement to take out the sell stops above this high here, and therefore we now have seen the sell-off, and we pretty much are back in a sell program on the H1 as well. So as you can see, Friday London session pretty much trading above the Asian highs, then a sell-off, and then we reverse again into the weekly close, and there we have the weekly close again. And if we take a look at the daily, you can see we pretty much had a retracement daily profile after we've seen this large expansion here, right? And you can see now as well we have equal lows here. We have the fair value gap and the Friday lows, so we have a set of equal lows here, which will be interesting going into next week's price action. So how we will continue this daily order flow and the intraday charts will be again the topic of the following up video. And yeah,